Well, folks, welcome to a synthetic Friday here, right? Markets are closed tomorrow, but we still got a jobs number. That's going to be an interesting one. Uh, a lot to cover today. A lot of warnings here. Not good. Kind of different sectors too, dragging the market down. We'll talk about that. Defense, defense, defense. Gold and bonds in the TLT. What's the market trying to tell us here during this consolidation period? We'll chat with Raghee at 8:35. Get her view on the markets. It's Thursday, but really Friday. Pre-market prep. Let's go.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Conan
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I'd buy that stock for a penny.
with everything you need to start your trading day.
All right, good morning, traders, investors. Let's get started on this Thursday. S&P futures up 3.25 at 41.2050. We have the dollar just flat here at 101.58. The bonds, we've been talking about this 134 level, and here we are. Breakout or fake out? Crude continues its move in the $80 handle, up 34 cents, 80.95. Gold down just about a buck, 20.3480. Silver remaining in the $25 handle, up almost 6 cents at 25.09. And Bitcoin quiet here at 28,025. Triple D, we got some warnings out there, some big warnings. We got
Yeah.
tech kind of taking a little bit of breather, but we got stocks picking up the rear again. Another bout of wicked rotation. Let's discuss it here this morning.
Yeah, definitely yesterday too. Same thing. Wicked rotation is what we continue to see when you've got certain stocks going down, and tech had a bad day, especially the smaller tech stocks had a really bad day. But again, they didn't come out of stocks. They just rotated into the value trade yesterday. So they were going defense. Procter Gamble having a good day. Johnson Johnson holding up very well, obviously, after its big move. You had all those oil stocks that were really beat up, the refiners, Valero, MPC, basically got back all of their losses. So they were down 7-8%. And then they just turn around, crazy as candles. They turn around and bottom right back and go up 7-8%. Incredible moves there too. So clear rotation happening out of tech into value yesterday. Not sure if it continues, but that's what the trade was yesterday.
Yeah, banks, they kept going down. They got a little bounce at the end. You got to be concerned about this Schwab here. I mean, this thing under $50 now. Step down sellers over the last 5, 6 sessions. I mean,
Problems.
what does there's something, someone knows something out there that we don't? I mean, this thing just continues to leak. But Mitch, we got a lot of major warnings out there today, and let's start with LITE.
All right, let's go to that Lumentum here, cutting the Q3 revenue guidance range from 430 million to 460 million. That was the range that was prior given, now to 380 million to a high end of 384 million. So you can see very big cut there from even the low end of that 430 to now 384 on the high end. Major customer rejected all shipments. That's what was stated at first. And it looks like after we found out that it was Sienna that was the rejection here, it looks like a major customer, but it looks like also they went after multiple companies here as they didn't know at first exactly who that major customer was. So tell us a little bit about what you saw in the after hours while you were looking at this, Dennis.
Well, it was such an interesting trade, and you can say, oh, who cares about Lumentum? But the problem is all of the major customers are all the big tech companies. There's a lot of huge major companies that buy product from LITE, including Apple. So, but it was a network company. So you're like, okay, well, it's not Apple. So then they just started hammering all the network stocks, but they picked on Sienna right away. It kind of jumped out like a sore thumb. And later on, it was mentioned that it actually was Sienna. So CIEN is trading down 5.38%. So if you want to go to LITE first, it's down 13% on the warning. They're blaming Sienna. So Sienna is trading down, obviously, because they're not taking shipments. So demand must be worse, is what the market is reading into it. Cisco trading down. Here are all your network stocks trading down. Cisco, CSCO, ANET is Arista Networks. It's trading down on it. Juniper is trading down on it last night. I saw FFIV offered down. Wasn't really trading down much, but was offered down on it. And I think Apple's trading down on it too. So again, Apple, not the network stock, not the company they're blaming, but Apple's a major customer of LITE, and the market's still reading in, well, if LITE's got some issues happening here, maybe it, trickle, or maybe it's coming from higher above. So Apple's down $1 here this morning. I think that's what you can blame is Lumentum, LITE.
Oh boy. I mean, you look at some pre-market charts and after-hour charts, and you said, like, remember Square a couple weeks ago? I mean,
Yeah.
it was a short report. You were coming in to support. It was like not the low of the move.
Yeah.
And now you got this one. And you know what? No, I mean, you got a mild buyer here at 44. Now, I don't know how big they are and how long they're going to be there for. But if you're not much of a bounce, but if you're looking at the monthlies here, then you want to like maybe pick up if you're buying at 44, you better be prepared for a test of 40. If you want to be a little bit more patient, I know that would be down $11. There's going to be a lot of, there's going to be some rip roaring rallies here. But if the Bulls can't defend this 44, I just see 40 on the monthlies. It was the low 2 months in a row, and then you dip back. We're going back to late 2018 and also mid 2019. So I don't know. There's not that aggressiveness in it. And so other suppliers to the internet, Dennis, when you talk to some of the big companies, you see what Fastly did yesterday. You kind of feel like some people maybe, they're the network, right? They're supposedly
growthy tech. Was really hit across the board,
Mhm.
and there was some major stocks getting hit, especially the nosebleed valuation ones, the Cathy type stocks, and the ARKK, which looks like it's completely failed now at 40. Just like that. I mean, we're everybody's talking rah bull, and just like that, it's a really ugly couple of days for the market because the stuff that's holding the S&P up, the stuff that's holding the SPY up, is the stuff you would expect it to hold up during a recession. We really jumped into the drug names. Pfizer starting to pick it up a little bit. I'm still long Pfizer, but Johnson & Johnson with their news, their top news, that did not sell off at all and continue to rally. So we were right with that call. I was saying when FedEx was up 3%, Johnson & Johnson was up 3%. I'd rather own J&J than FedEx. FedEx actually gave it back, a lot of it. J&J continued to rally, so we were correct on that. FedEx is rallying this morning because it caught an upgrade, but that's a side note. But just taking it back here to tech, I mean, you had some serious selling pressure here in tech yesterday. Now, again, the big dogs holding up fairly well. I mean, Microsoft was down a couple bucks. I know you had a short position on in there, Mitch. Not sure if you covered it, but Apple is holding up pretty well. We haven't had a warning from any of the major companies here yet. So is that coming? It's hard to say. LITE isn't a good sign, but then LITE might just be a one-off. Maybe it's just this one customer, like they were blaming this one customer, and maybe it's not a sign of a slowdown. But the market isn't taking any chance because they're hitting all the customers of LITE.
All right, just to give, I am out of that AMD position. Was able to close it yesterday. Nice little gain on that AMD.
What about
position.
the Microsoft? Weren't you sure?
I do still have a tiny piece of Microsoft. Yes, that was what I opened up yesterday. It was a nice little pattern on the 15-minute. Was able to hammer down on that and still have a little piece now. I think with these trades, and there's a big reason why I took majority of it off yesterday is that I always feel like in this market, you got to take that money and run. And if you want to give yourself a little bit of running, that's fine, but if we can get the first swing down, I've been taking that profit. And so it seems like we got the first kind of breakdown on these bigger charts. Now I'm watching stocks like Apple, of course, because it was the strongest one. I feel like out of all the big boys, it was up there to 166 even after it just broke from like 160. Now it's pulled back to the 9 EMA. I think we could find a little bit of a bounce in tech today. I don't think it's just going to be one straight turnaround down. So I'd ask you, Dennis, do you think there'd be some buy the dippers coming in?
Yeah, I think they do. The one thing is just we've run so far, so at what level? And what you want to see if you're a tech bull is you want to see them shrug off this LITE news, because sometimes you'll see LITE with Apple being a major customer as well. If it was just a flat out LITE warning, I would think Apple would be down a lot more. Because they blamed Sienna, a specific company, for it, the market is kind of taking in its stride. They're hitting Apple a little bit here, but other things being equal, when you see one of the Apple major suppliers warning, you automatically assume, here comes the slowdown. They're not buying parts. What's going on? But that maybe is not the case because they've just blamed the one company. But what you've got to see is they buy Apple back today. That's what you need to see if you're in the bull camp. You don't want to see the follow through here. It's a very important day for the market here. And we're still in the calm before the earnings storm as well. We don't know.
Jobs number tomorrow, man. I think
And
you
that's
guys
crazy too on the Friday.
That's absolutely crazy.
Yeah,
that, we got
I hate that because I like trading those jobs numbers, and I hate that the equities are going to be closed on that. But we had multiple warnings yesterday. It wasn't just LITE.
Right, Costco, different
and
sectors.
Costco was a flat out miss. Their March sales came out and flat out missed, and e-commerce was down over 12%, the sales of e-commerce. Now, Costco isn't a big e-commerce company, but they still sell stuff online.
That's
I
one
bought
thing
stuff
that,
online from Costco before.
That's one thing I think
how bad was the warning, Mitch?
Not a warning. They gave March sales. So they're the only company, just so everybody knows here. It used to be retail stocks all gave same store sales. Every month they give their monthly sales.
Monthly sales.
They've all scrapped that except Costco. Costco is the only one that continues to do it. So every month we get the previous month's sales. Yeah. March sales were light. I'll let you do the numbers here, Mitch.
Yeah, let's talk about it. Costco wholesales reported March sales results of $21.71 billion, up from $21.61 billion year over year. U.S. comparable sales for March fell 1.5%. And then when you look at e-commerce, excluding energy or gasoline prices, they went down about 11.6% on a year-over-year out base, and about 5-week percentage basis, about negative 6.6. So definitely taking a hit on this e-commerce news. But this is not the first time that I see Costco take a hit off of this, right? They took a hit on this in November after the Thanksgiving and the Black Friday. They had lower e-commerce sales, which ended up hitting them, and they came back on that. So, I think what we kind of watch for Costco, and I've talked about this plenty of times, is just watch the monthly chart. This is a chart that loves to have huge range on the monthly, usually about, let's say, 60 points.
It's a $400 stock.
Yeah, so
so you're gonna get big monthly ranges. When I look at the monthly here, I see like a triangle here. Coming down off that all-time high, and now coming off that last year. You did get a dip. The problem is you don't have more than like one low in an area to lean on. Now you did barely dipped under 480. You got the 479.50, and I got one little pesky low here at 478.50. So the fact that you bounced $6 off that kind of maybe take you 5 buyers ahead of it. The 480 is also a psychological level. You got a long ways to go to work your way up to the bottom of yesterday's range. I don't think we're going to see that. I don't know if we're going to see that for a while. That's 3 lows in a row at the 495 area. Maybe they'll stop giving monthly sales after this kind of whooping, but trading 84.50, down 12.63. And the other thing is concerning, you're right, it's tech, and then it's retail, and then we also have a healthcare company warning too. Abby provides some guidance. Give us those numbers.
Yeah, let's go to Abby here. Abby sees fiscal year 23 adjusted EPS at $10.62 versus and a high end of $11.02 versus an estimate of $11.07 estimate. Q1 adjusted EPS at $2.31, $2.41 on the high end versus a $2.55 estimate. So missing on both of those estimates for their guidance looking forward.
The Walmart guidance was late yesterday too, and they bought that stock right back. So you got to remember the industry that you're in, and right now this market is playing defense. So I don't think they kill Abby here. The guidance wasn't great. It is a lowered guidance. They did knock it down $2 or $3, but they've already bought the dip in ABBV. So I'm taking the tell from Walmart. Really, the market's still playing defense. Lower P stock, Abby, drug stock. It's the kind of stock, and I had this in my long-term portfolio forever. It just went up too far, and I finally did get rid of it. But I think this, I think this is kind of stock that they're just not going to whip. I think this is one that could bounce back, even on disappointing guidance.
You know what? There's a good level on the upside here. We talk about stocks going up on supposed bad news. If you're an avid trader, you got to take a look at the double top at 160, 170. Boom, you're only a buck away here. So if somehow you get up to that area, you take it out. Things are pretty wide open on the upside. I see almost 350,000 shares traded, Dennis. I don't know where the majority of that volume, did that volume take place this morning? Yeah, I guess so. On that one bar, you dipped to 158.43, but you're right back in
No, you got to
scratch.
again. So
So it's
just
FINRA's?
yeah, and
Okay,
what you
that's
see,
what I
so
thought.
this screws people up, and I'll just give the little market structure lesson is always tail of the tape. So when you're reading the tape and you're looking, oh, it's trade 346,000 shares, trade a lot. Go and look at the actual tape. Bring up the consolidated tape. If you're data provider, okay, if you're a retail trader, you're a long-term investor, you don't need to worry about little stuff, little minutia like this. But if you're trying to be a full-time day trader and you don't have the tape, good luck. I mean, good luck. You've got to be able to buy some stuff. And again, this is a business. I spend a lot of money on data every single month to make myself pay the bills. When you're running a business and you're running a trading business, you've got to be willing to spend money to make money. If you're willing to spend nothing and you're looking for all your news from Twitter, which is a complete mess, which I was tweeting about yesterday because the spam on there is just, and you're like, I don't spend anything. I expect to make money here and I don't pay commissions. I mean, good luck. And I think you're set up for failure if you're not willing to spend to make. So you've got to have the data. And there is, a lot of your quote providers that give you the consolidated tape. But you got to be able to look at the market center where things are trading. If you look at 808, 160.80, we had two trades of 171,899 shares and 171,897 shares on FINRA. Again, the FINRA tape doesn't give you clarity. They need to add more clarity because anything done off exchange is just put to FINRA. That's literally 45% of the market is just blasted to FINRA. We don't know if that was, a Liquidnet cross. We don't know if that's, another, but we do know it was done at the close. When they're done at the close, they're typically late reports from, institutional crosses at the close from the previous day. So what that means, it means nothing to this market here right now. So if you're looking, look at the spike up at 808. That did not occur. That was probably a late report to the tape from yesterday at the close. So sometimes you have negotiated trades saying, okay, I'll buy, you sell, we're doing it at the close.
I was going to ask you what the actual market was. And because I saw that, and I know this doesn't trade.
And you see on TradeStation here where you see the spike up to 160, correct. So, and we could talk to TradeStation about this too. They should remove, your data providers should remove those FINRA trades and that happen after hours. They should not be there because they're not in the real market. So again, during the day, FINRA is trading between the quotes. It's off exchange market makers trading between the quotes. But for the most part, when you've seen these after-hour FINRA trades, and again, little ones could be off-exchange market makers trading in between the quotes, and those are happening real time. Sometimes it's just late reports, though. So this is probably a late report from the close. It did not trade back up there. It's been offered 159 all night.
Oh, really?
So
okay.
It's offered at 159.50 right now. So it is not currently trading at 160.80.
Okay, then then we really won't see that 160, 163. So it's offered at yesterday's low. So
no, it's offered at yesterday's low. That's correct.
Okay, and then the next, you got an interesting area here. If the seller gets more aggressive here, I'd look at 157.5 short term here. There was 3 lows in that area. Your 2, 3, and 4 day lows. I was thinking, wow, scratch on that kind of guidance. But we got the true market offered. Thanks, Triple D. Offered at 159. We'll see what happens at 157.5 on the downside.
All right, DK, that's an interesting conversation. I'm actually looking into these kind of services like Bookmap. I'll talk to Dennis about it. Maybe you can take a look at it and we'll dive a little deeper for you. So nice question,
again,
DK.
I can't
we just don't have the answer right now.
All the individual services.
Exactly.
I don't subscribe to 1,000 different quote providers. I could just comment on the ones I subscribe to. I try different ones until I find the ones that work. I'm with Refinitiv. I get most of my data through Refinitiv. Interactive Brokers gives you some of the data too, but I've got NeoVest and I've got Refinitiv. I've been customers of NeoVest and Refinitiv. Refinitiv has come a long ways. Refinitiv was Ready Plus. And then, it was a spin-off from Goldman Sachs way back, when we got taken over. And it started with, what was the Spear Leads and Kellogg, Joel?
Yeah.
Ready Plus was originally a Spear Leads and Kellogg product back in the 90s.
Oh, wow.
And then Goldman bought SLK. and then Ready became part of Goldman Sachs, and we've been with them the whole time. And then, and then obviously Refinitiv, as Thomson Reuters, and then Refinitiv. So Refinitiv owns Ready Plus now. I've been with a Ready customer here for 24 years. It costs money. It's a professional
Tools.
software.
You gotta pay to play,
some bucks
man.
for that.
You gotta pay to play, man. That's what I would say. Pay to play.
Yeah, I dropped roughly, just to let you guys know, I dropped roughly, I think it's around $2,500 a month in data and news feeds. $2,500 a month between data, news feeds, and scanners. So those are the three things that I'm buying. So I have to make $2,500 just to break even, obviously. But you know what? That's how I get all my information. It's how I'm quicker than the average bear. You got to pay to play.
Average bear.
Yeah. Let's take a look at the
You're not the average bear,
XLV.
Dallas.
XLV is what
Just
I want
real
to
quick,
take a look
what do
at.
we got going on here in the S&Ps? Do we have anything? Yeah.
Well, we got 830 numbers coming up, and so
what's the 830 number today?
We get jobless
claims. Yeah,
initial jobless
I gotta go
claims,
wide on that
continuing
too.
jobless
Guys
claims.
keep making me go wide.
And
man.
don't forget Bullard at 10 a.m. Eastern today.
Wooly Bullard.
Bully
Bullard. Wooly Bullard.
He's gonna be out there. Be careful.
Watch it now.
Watch it. But XLV is one that I'm looking at for pullbacks now. It already is a little too extended for me, but definitely I'm trying to play some of this healthcare move. Been looking at these drug manufacturers. They've been starting to get going. What do you see on this chart, Joel? What would you be looking for pullbacks or opportunities?
Man, I mean, it's been straight up 124. I mean, looks like you got room to 134 here. I mean, sometimes you just have to plug your nose and buy something instead of waiting for a pullback here. I see the room up to 134, but as far as I just see three big candles. So don't see a pullback on the horizon right now. Of course, things could get shaken up tomorrow, right? With the with the jobs number, but it's just we talk about rotation, and those stocks were out of favor for a long time, and right, look at that. Pfizer built the base at 40. I mean, look at the big components of the XLV and see which one hasn't left the station yet, perhaps.
Yeah, there's a lot that just took off. I know Pfizer took off yesterday, and other
Merck's been strong.
Merck's strong. Lilly. Amgen is one that I've been looking at, but that's more biotech than the major drug manufacturers. But that's really gotten going too. So I'm looking at that one. That one looked interesting because I was like, man, if we could get back there to 290, that's a nice move if it could get back there. But yeah, definitely Amgen strong in the last couple of days, and we'll see what happens to these kind of healthcare names. IBB could be another thing that's kind of lagging a little bit, not as strong as, of course, the XLV. So that's kind of one that I'm keeping an eye on. At least it's
got a good level here in the IBB. 3 highs right there. Boom, 130. Get that 130 seller out of there. You got some.
Again, that's drug stocks, biotechnologies, drug stocks playing defense.
Right.
So it's not surprising. There's certain things that, have positive correlations and negative correlations. We know when times get tough, they start buying gold, they start buying bonds, TLT, safety trade, not corporates, but government bonds, and they start buying drugs. And that's really what they've been doing the last few days. They're starting to lean that way. Schwab keeps going down. They're like, we're a little bit nervous. Let's move into the TLT. Let's move into some gold, and let's move into some drugs. I mean, that's what the market does when it starts to get nervous. Until you see Schwab start to turn around, and this is now the boogeyman in the room. It's SCHW. We'll keep coming back to it.
It's hard not to.
Precariously near the lows. So, I mean, you wanted to see it bounce out of there. Kramer was saying it was good at 55, 56, hoping, it was going to bounce out. It's went straight down since. Even Kramer couldn't help the stock. I mean, I don't know what's going on at Schwab, but all I know is when the stock's going down like this, it's usually not for no reason.
Yeah, that's what I would say. What I usually say is when it's going down like this and I don't have an answer, it's they know something I don't. And I don't want to find out because the price action's telling me it's not a good thing that they know.
And I mean, Mitch, and not that we're comparing this to the financial crisis. I just, went through that. I'm just saying during the financial crisis, and I had this conversation, and we're not there. We're not near, and we have the bull scouts. This isn't going to be like the financial crisis. So I'm not saying that. But what I'm saying is, you can use, information and tells from when that was happening. Stocks just don't, in the case of Signature Bank, I guess they did go straight to zero from like 100 to zero. So they typically don't do that. But what happened was you had Bear Stearns was the boogeyman that really started the financial crisis. It was started with Bear Stearns. Like it started with bad lending. It started with other things. But when you're looking at the stocks themselves, Bear was the first one really taking the hit. I can remember when Bear went from like 80 to 60 in like a week. And we're looking at it and we're like, what the hell is going on at Bear Stearns? And then it was like, and it was hung out there for a bit, but then it started leaking again. And then we were down to like $30. And then we're like, man, there's problems. And then Lehman started to fall, and then they all started to fall. Schwab is probably bigger than Bear Stearns was back in the day. I don't know that for certain. I didn't go look at the assets and compare them, but Schwab is huge. Schwab is not Signature Bank. Schwab is not SIVB. If Schwab's got problems, the market's going to have problems. I don't know if Schwab has problems. I have no idea if Schwab has problems, but I don't like the trading action in Schwab, and that keeps me in the bear camp. It keeps me in the cautious camp. And I'm not short stocks, so I'm not full on. If I was bearish, and people keep saying, oh, Dennis is really bearish. Dennis is not short stocks. I go short stocks when I am bearish. I am just cautious, and that's why I've raised cash. There's a big difference between being bearish and being cautious. And I've been preaching caution on this show for basically a year and a half, but I've been preaching a lot of caution over the course of the last few weeks. When I'm bearish, I short stocks. When I'm bearish, really bearish, I buy puts. I've done none of that. I've been trading market neutral. I still own stocks. I'm still 35% long. So even though I'm 65% cash, that means I'm still 35% long. So I'm not full on bearish. I don't think the market collapse is coming, but I don't know that it's not. And that's why I want to have some cash just in case, times get tougher. I just don't see a reason to be all in this market. So write that down. Cautious is not bearish, because you'll have people say this all the time. As soon as they say something that's cautious, oh, I don't like the action in Schwab. He's bearish. He's an evil short. He's this or he's that. So there's a big difference between being cautious and bearish, because everybody says how bearish I am. It's cautious. That's what I've been for a long time.
And I also feel like 2 minutes to the number here, a minute and a half to the number. Someone was asking if jobs number comes out the first Friday of every month. And what we had Good Friday, right? So the markets are closed. Futures, I believe, are going to be open for a limited amount of time. So that's what I mean. With all the layoffs and everything, it really has to start showing up sometime. I mean, you would think in the jobs number. So will the bad news be good news and they'll rally the market, or will bad news be bad news saying this is more indication that we're going into a recession? So we were green. We're now in the red by just a couple handles. Not quite mid-range yet. Man, I don't know if we're going to have it kind of feels like an inside day, but we'll see what happens if with the shakeup on these numbers. Yesterday's low was down under 4,100. There was nothing there for you, just the psychological 4,100. Right on the upside, 2350. That wasn't even the intraday high from yesterday. That was right near Tuesday's close. That comes in at Tuesday's close is 29 even. We're kind of in the middle here. Mitch, do you have a preview?
All right, let's give it here. Initial jobless claims consensus is 200,000. Prior was 198,000. So let's see if we're above that 200 or below the 198. I would love to see below that 198, because that might squeeze us up a little bit. But continuous jobless claims also going to be on watch, 1.699 million. Let's see what happens here. Jobless claims coming in, team.
Very choppy. Small movement, though. I mean, we're talking 2 or 3 points.
It's one thing is just to kind of state, like, are they going to jump on this number since we're not going to be able to trade tomorrow's number, really? I mean, that's what I was thinking.
I don't know. I think
claims coming
sometimes they're different.
It came in hot here, 228,000 versus 200,000. So that's a good look, at least, to starting to see the actual labor market weakening. And we could start saying that because now we've gotten, I think, 2 numbers that can agree to that, right? We got ADP that came in low. on jobs added. Now you get the initial jobless claims 228,000 versus 200,000. This starts to show that the labor market is starting to show a hint of
All
weakness
right, they're
here.
hitting it now. Now they decided you had a little bit of a pop here. Pre-market low comes in at 05 and a quarter. So more the Bears are getting their way here after couple up days in a row. Now a couple down days. Market's trying to find a bid here. As I mentioned, 05 and a quarter is your pre-market low, and then yesterday's low is at 4099. Trying to see how the stocks are reacting
Tech is
here.
very much weighing on this market right now.
Tech,
and
yes.
we can easily see, when I look at my screen, I've got all the pockets. I see utility stocks are trading up. The banks are actually holding up today. Some of them are green. Some of the oil stocks are green still from yesterday. Your drug stocks are trading higher. XLV is trading higher here as well. But then the boogeyman that is really down is the same things that was down yesterday. Tesla's down 1.25%. Apple's down 0.84%. Netflix down 1.2%. I mean, we're on a flat market, but you can clearly see the tech is lagging here today. All your growthy tech stuff is down here as well. And then we already talked about the network stocks with the Sienna being down off of the momentum warning. So you can clearly see the tech is lagging here.
And tech is what got us back up here too. So you know,
tech leads. Those 8 stocks, and we can continue, to have people on Twitter say that those 8 stocks, is still there's 492 other stocks, but those 8 stocks have a lot of weight. Those 8 stocks are the reason that the S&P looks much different than the IWM. I mean, there's a big difference there. I mean, the IWM is sitting down here near the lows. The SPY is near the highs. So we can say, oh, it wasn't those 8 stocks. It was another 150 higher or 200 higher. Yeah, but there was 250 lower. So, I mean, just, you would think on average, there wouldn't be half the index lower in the first quarter when the index went up 6 or 7% in the first quarter. So we know it's those stocks that are holding it up.
And
mathematical, it is just math.
It is. And just to illustrate my point here, I want to share my screen. I'm going to go this real quick, and then I know I'm sharing that, but let me go to this. This is a really important thing. I'd just like to point out. Look at these stocks. Look at the tech heavy. Apple 7%, right there. There's over 13%.
Can you blow that up, Mitch? It's like my eyes are. I got to lean closer and closer.
I'll make it a little bit bigger, but maybe Joel, if you could do the top right on the 3 dots and then just zoom in.
Top right.
Zoom in right there. You should see zoom right there. Let me put it bigger so I can just kind of see it out here. Yeah, you see zoom right there?
Yeah.
Just hit the plus.
Oh, there we go.
Plus.
There we go.
Oh,
okay,
not too
scroll
much.
Down. Now we can see it. That's all right. Just scroll down. You're good.
There you go.
There you go.
Right there, man.
I got you, man. Come on.
Dennis, we've been talking about these components and also you got to throw that. I count a double. I don't even think A and C. I just look at alphabet. I mean, you add them up.
I have the 2 Googles. Yeah,
that's ridiculous.
Google's number 3.
ExxonMobil used to be number 1. GE, boy, I wonder where GE is. Well, they split the 2 companies, but I wonder if you put those in old GE, and then you can just go farther on, go down the next components. They change the ones at the bottom. JP Morgan's been falling. Meta used to be up there quite a bit higher. That used to be, but I just wanted to share that with you guys because we talk about it so much and just wanted to illustrate the point. So that's
Apple. If you can bring that back up there, we didn't have a chance. Apple was 7%. You brought it down so fast that I couldn't see what the number was.
Okay.
Apple and Microsoft are basically what, 13% of the S&P?
You got it. All right, let me do my
2 stocks,
zoom.
13% of the S&P. It's incredible.
Yeah, let me do the zoom again here. Oh, the zoom is on. Yeah, right there. 13, and then 30, you could just do the math. 13, 17, 19, 20, and then 22. Tesla right there, 23, 24. Right up to
6
25.
companies, 24. 6 there.
Yeah. Yep.
Yeah. It's why the index is not indicative of what's really happening in the overall market. To the chat's point, look what happened to Deere yesterday, Joel. And we've been absolutely correct on this. Haters can hate all they want. I've been right on this one.
Well, it took a long time there, Dennis. I gotta give it to you. You are right eventually on this one.
I was right on this the whole time because I went bearish at 440. So I actually took almost no heat on this call.
You were bearish a little earlier than 440.
I don't know if it was too much earlier than that, man.
I got to keep you to it when I can, man.
I don't know.
On
If you're
this one,
saying I had a bad call on deer, I don't think you're listening to this show because I've been on the deer train.
I'm not
going
to say you had a bad call on it. You were just early.
I wish I could have perfect timing. I wish I could be 100% right the whole time. But you know what usually happens is, at least from my history, and probably my earnings show it, is I'm usually early, but often I'm right. Not always. I'm going to be wrong, but often I'm right. I feel like deer and cat, and people can go look at the evidence. I feel like I've been pretty right on these two stocks.
Hey, that is just, I'll tell you one thing. It's been a nasty turnaround in that deer stock. Definitely coming back here towards that 420.
It was going to happen.
Eventually,
we had subsidized earnings on some of these. Like some people buying farming equipment because they were just doing it for the write-offs. They were doing it for different reasons. Good times. We're spending money. Gets tighter. When it starts getting tighter, times aren't as good. Commodity prices ripping higher, wheat going higher. The farmers were in the rich. Of course, they're buying new equipment. But you know what? Times have that ship has sailed a little bit here now. So they're probably not going to continue to buy at the rates that they were buying. So anyways, bringing it back here, deer is now 75 points off the high. Remember Kramer talking at 440, and he was like, this stock is the one you want to own. And I said it. I tweeted it that day. I was like, this is not the stock for you. And it's down 75 points in there. So I beat Kramer on that one.
All right. How about one thing? I see the chat going crazy already announcing. Let's get to our guest interview today, team. Let's go. I see the chat out there. They're yelling, Raghee, Raghee, Raghee. Look at that. The chat's ready for you. How we doing?
I'm doing good. How are you all doing? I'm loving the deer conversation.
Oh, you know it. There's always a battle somewhere in the
market.
Give
us your thoughts on deer. Give the Raghee Hornet. Raghee always has fantastic commentary. Yes. And Raghee makes me change my mind sometimes. There's not a lot of guests that come on this show and actually make me change my mind. But Raghee gives such good arguments. She makes me think. I change my mind for Raghee. So I want to know what Raghee's thoughts on deer. Tell me why I should buy or sell deer.
So first of all, it's so interesting. When anyone's talking about a call or a view on a stock, my first thing is, what time frame are we talking about? Sorry about the world's worst lighting. Welcome to daylight savings in South Florida. But what's the time frame, right? So if someone tells me this is my hour outlook, this is my daily time frame, weekly, ever since if I take a look at the chart, March 10, that was it. We broke the 200 exponential. We've had a hard time getting above it. And frankly, at the end of December, it was already looking wobbly. So I wouldn't have the confidence you had, my friend, to call for the weakness, but I sure wouldn't be a buyer. And I think if we can always look at a chart and say, do I want to be a buyer or a seller? And we can't, make it that binary, we're in trouble. So if I can eliminate one side of the conversation, I'm already heading in the right direction. So I don't disagree with you. Not until it gets above that 200. The weekly would be a different conversation, though.
Let's take this back to the overall market here now, because it's been such an interesting, S&P. We've been arguing on this show for a long time that we've got 8 soldiers really carrying the majority of the weight. I mean, half the S&P was down in the first quarter. Another 150 companies were up, but it was really those 8 soldiers that really carried the S&P. It's why it looks much different than the IWM. It's why, the Q is really ripped, because obviously those 8 soldiers are more heavily weighted in the QQQ. Can they continue to outperform and carry this market higher? What are your thoughts here? One on obviously mega cap tech, and then 2, the overall market.
If we take I was listening early on when you all were looking at the different weightings in the indices, in the sectors. And I think that what y'all did was, I know this is important, and I know that the listeners get it too. We live in a high concentration world, period. So when you talk about the 8 soldiers, we're talking about heavily weighted stocks, disproportionately heavily weighted stocks. I'm playing XLE right now, right? So we've got, 3 dozen stocks in XLE. I'm not even sure, but 2 stocks account for nearly 40+% of wherever it's going, for examples. That's an extreme example of high concentration weighting. we crack open, say, tech. Microsoft and Apple are what, 25%, nearly 25% of
Yeah.
QQQ, right? So you're absolutely right. So when we don't look at how, exactly how y'all said it, a small number of stocks have a disproportionate influence over the broader averages in key sectors like XLK, XLY, XLF, XLV, then we start to forget that most of the stocks out there really don't matter. And now I'm going to say something really controversial. That's why I don't use market internals.
Oh,
Boom.
that's a boom. That's a boom because you know what? Most technicians out there do use market internal. So that's very, very interesting, Raghee.
This is why I choose to use on TC. They have their own indexes and they're equal weighted, right? And I think that's so important to sometimes just look at the sectors in the industry on an equal weighted basis, right? Because there's too many of times where all I hear about mention of sectors and industries is the spiders. And that doesn't necessarily tell us exactly what's going on underneath the hood.
The S&P is really interesting in that the top 3 weighted sectors, XLK, so think Microsoft, Apple, XLF, so now we've got Berkshire and JP, and then XLY, which is Amazon and Tesla. And I'm just naming the top 2. And if anyone were to look at the weightings, you think, oh my gosh, that's pretty much the sector. So if you look at S&P, it's a little NASI, it's a little Dow. It's a really good way to look at the market, right? But when I look at the market, I try to remember, just as y'all said, it's not just what's going on in the indices. What's happening in treasuries? We can look at ZB or ZN. You know, what's going on with the dollar? The easiest way I know to do that is just look at the 6E futures. The euro and the dollar have a nearly tick for tick negative correlation. And then look at S&P, and I've got a really nice pulse of what's going on.
And what we're seeing in the last few days is a little bit of defense. I mean, when I look at the pulse of what's going on, I see gold ticking up near the highs. I see stocks like Procter & Gamble coming back. Walmart has a light warning, but they buy that right back because, you know what, Walmart holds up well if you get into tougher times. And the TLT, and then the drug stocks. I mean, we're seeing the drug stocks. So I feel like this market is playing a little bit of defense the last couple of days.
If I look at the normalized performance of the last 1 to 5 days, and I'm looking at it right now, top to bottom, XLU, XLV is definitely getting some nice Q2 sector rotation because it's been a dumpster fire for the last 2 quarters. Energy is getting a nice boost because OPEC keeps saying we're going to stay true to the production cuts and compliance has been really good. And then there's XLP. So I mean, you're absolutely right. XLU, XLP, 1 day, 5 day normalized performance. They're right there near the top 3-4 sectors. So we're definitely seeing the interest.
We're on the line with Raghee Horner, Managing Director of Futures at Simpler Trading. You know, with all this been going on with the banks, with the Fed, you know, where are interest rates going? Where's the Fed pivot? I mean, if you're looking at the 30-year bond or the TLT, have you got someone playing defense, or they're anticipating, you know, a pause in the rates here? And I thought, you know, we got hit initially on the Powell comments, and I think you got a Powell joke for us too, don't you?
I think we were talking about what we wanted to talk about today, Q2 rotation. That to me is exactly what y'all said, defensives and healthcare. And then, you know, what's Powell's favorite beer? You know, Hold My. He is definitely in, he's in a vice grip right now because on one hand, he said a very unusual thing in that last meeting when he and it was very strange to listen to Yellen and Powell share the podium for that presser because, you know, I know they had their little Hall & Oates moment, but we didn't need to hear from Yellen. It was way too confusing. But when Powell kind of left the mic comment of we're not going to cut rates, that was a very strange corner to paint himself into. Like I said, I don't know what he had a shot of before that press conference, but when Fed Fund Futures heard that, now we see that if I look at the May 3 meeting, it's looking more like a hold 60%. We got to the June meeting, it's still looking like a hold at 57%. But in June, we have about a 33% expectation for that quarter point hike. So that quarter point hike conversation is not going away. But come July, we're definitely now seeing the quarter point cut in the lead, not by a lot, but sitting at 47%.
Wow. Going out to July, huh? So the market is looking forward. I mean, I don't know, that news conference too, when I saw him speaking and you know, just his composure and everything. He was firm, and then Yellen was making those statements at the exact same time. Very, very confusing. But the inflation front, I mean, you look at some of the commodities. I mean, this crude oil move is not going to help things out. I don't think it will be reflected in the CPI for that's coming up in next week, I believe. But man, you got to look at sugar. You look at some of these commodities here, and I mean, I just don't think. I don't think they've nipped the inflation bug. I don't know. July seems like early for me. I like to see more of a pause, but I mean, if that's what they're factoring in, I guess things could always change after that April report or the
Really
April
slight.
report.
It's a really slight. I think it's
Okay.
47% for the cut and 38% for the hold. But come September, it's game on. That September 20 meeting, the Fed Fund futures are telling Powell, you better give us a cut or we're going to give you a tantrum. But, it's interesting. What version of inflation are we looking at? Because I'm pretty sure the Fed's looking at the inflation on Mars, always have been. But PCE is a bonkers number, and that's their pet inflation. That's their favorite one. And then when we even look at CPI, if we're going to exclude food and energy on core, well, now it gets bonkers. We're going to exclude two things that nobody needs, right?
Who needs food and energy and shelter?
Yeah, that's it.
So now we get to pick and choose, we meaning these FOMC members and economists, as to which version of inflation we're going to start to make our decisions based on. I mean, it's a wacky, wacky world. So I'll just look at those target rate probabilities and see what seems to be communicated to the Fed, which is you better cut in September.
How's Raghee positioning herself right now? That's what I really want to know, because I'm a little cautious, more cash than normal. Not bearish, and people keep saying I'm bearish, but I'm cautious. I've just raised some cash in my long-term account because I just have so many unknowns. The Schwab thing scares the hell out of me when I keep seeing it leak. I went through the financial crisis, not saying this is a financial crisis whatsoever, but I went through it, and it wasn't fun from a long-term investing perspective. How's Raghee Horner positioning herself right now?
I take a look at the financial crisis that we just had. Then I look at 2008. And then I look at the first financial crisis I traded through, which was the implosion of long-term capital management, Asian contagion, Russian ruble, all
those were fun.
Concentrated. And that was probably within the first 7 years that I was trading. So that was the first, oh my gosh. And then I saw what seems to be the pattern. Those are buying opportunities. So now I'm programmed to think, that's a blue light special. I'm totally dating myself, but I'm looking in Kmart, it's the middle of the store, and that blue light's spinning. And I just wait for volume to start telling me who I can coattail and where. So I still am very optimistic, which is to say I'm usually very bullish. So if the markets are going to pull back, we now know ever since the pandemic, central banks are going to step in and support. They bought HYG, they bought JNK. I mean, it was crazy what they were willing to do to support the markets. It's hard to be a bear. And I totally appreciate where you're at, because the fortunes are made being bears in the market, isn't it, Dennis? I can completely appreciate.
And again, I'm not bearish. I'm cautious. So there's a big difference, because when I'm bearish, I'm short stocks. I short stocks. I've been a trader for 22 years. So, when I'm bearish, I short stocks. Right now, I'm just like, I'm cautious. I don't feel like I don't feel like this is the Bear Stearns moment when, like we were seeing, I just don't feel like that's this, but I still feel like I just don't know. And that's why I'm like, I'm getting 5% paid to wait on a lot of my long-term, still trading, trading is different, but I have a long-term investment portfolio that I'm like, I've just raised cash because I'm uncertain at this point in time. But I love your blue light special talk. I have a lot of cash right now. Talk to me about blue light special stocks. What would you be buying today?
The simplest thing I'll do is two things. This is where you mentioned love trading, but then I'll look at a weekly chart. As a trader, I'm shortening my time horizon to 1 to 3 days. I don't mind overnight exposure, but not for very long. Day trading has been great. I'll day trade the first hour of the day and I'm done with it. The simplest thing that I can say is I'm just looking for stocks at or near the weekly 200. And that just becomes a list that I'm watching. That's my wish list. That's my grocery list. And I continue to watch that. Then I'll break down the sectors in the same way, and I'll break down the indices in the same way. But starting with that weekly chart, what's above the 200, what's below, I kind of look at that as the equator, bullish hemisphere, bearish hemisphere, and I'm getting my wish list set up. And then I'll just go place alerts on one of my favorite platforms, and I'll just wait for price to come on down. So I'm not having to babysit it, but every 7 to 10 days, I'll go look at that list again, replace my alerts, and I'm just waiting for those wish list prices.
All right. Well, I'm going to come in here on, we'll shift a little segment here, go a little bit to some different stocks. I have started to see the utilities started getting a little stronger there. That's just a different style of play. But of course, with the interest rates not going higher, could we see these stocks kind of continuing to push, especially with inflation and, the prices of energy just being so much more? I know that a lot of people were like telling me, like, I know natural gas is still dirt cheap, but it's not dirt cheap when I'm paying it.
Natty Gas completely phoned in the seasonal. So at the end of March, we should have seen that double bottom and a move into early April, completely disconnected. As far as where I'm still really looking for opportunity, XLE. So if we want exposure to oil and Natty, XOP is a great place to look. I'm pretty much focused on XLE right now. Definitely want to continue to be interested in XLV. If there's anywhere that, you turn the page on Q1, you look at Q2, and you look at, all right, what's on sale, what's coming off some nice neutral markets, but down near the lows. XLV on the weekly has been gorgeous. Been building positions in XLE, XLV, XLB. Basic Materials has had my interest as well. I'm looking to build positions in XLB. And so if we're looking for the shoe to drop, we're probably 3 years out. I'm looking more as, how can I get into ITB? How can I get into XHB? Even though mortgage rates did what they did with Powell's words, if we're looking at cuts come September, if I'm already looking at lower yields on the long bond, I'm looking at XHB, I'm looking at ITB, and licking my chops for the next 2 to 3 years.
How about that XHB? I mean, it's been holding up a rising interest rate environment, and some of these stocks have just been showing some trades. It's such a mixed bag out there, right? You see a lot of sectors, a lot of rotation. You would think if things were really going to get bad out there, you think it would have an impact on the whole builders. Now they have pulled back a little bit, but just overall, I mean, this thing, I'm looking at it. It's off the February higher, but is there any housing stocks that are on your list?
At this
Individual
stage,
stocks?
I love to go broad. I like to cast a wide net
Okay.
rather than pick those individual stocks. So that's why I love the ETF. So if I look at last June was tough for XHB, I think October was tough for XHB. But if I look at that weekly 200, we're above it. And despite what happened with rates, you're right. But it's been maintaining. And I see something like that with possible rate cuts in September. It's hard for me not to be bullish there. So I'll just cast that wide net. I won't worry about individual stocks within it.
Love it. Love it. You guys definitely keep up with everything Raghee Horner does. We'll see you again. And definitely, if you guys don't have her Twitter, give her a follow. I'll make sure to drop it in here in the chat so you guys can give the follow. We'll see you next time.
Thank you.
One. All right, let's take a little peek into the market, Joel, before we get to our TradeZero segment today. What are you seeing?
It's a slow and steady leak here. Haven't gotten yet to the pre-market low of 05.25. We have yesterday's low at 99. So it's a very tight range yesterday. The intraday range from yesterday was, I believe, just a little over 20 some handles, or 30, just under 30 handles. Very strange. I mean, there's a pause here, right? We've had the rally. We've had just a little pullback from the high, nothing where you see, super aggressive buyers. And you got to, it could be a big day today, and then the jobs numbers. So we're hanging in there. We're still, I believe, how are we doing for the week here? And we're down just a tad, a little bit from the week because we had that big day on Friday, but we're working on our third down day in a row after 4 up days in a row. So a little bit of a streaky market here. Down 6.5 handles, 41.10.50. Dennis, you seeing tech? What's going on with old Fastly? Is that still getting a whoop, or did it get a bounce here? No, not Fastly. LITE. How's that doing? Now, under 44 now. Step down sellers here. You may get a look at that $40 level today.
So, I'm just
right,
fighting in the chat, so I'm coming back to you now. I'm scrapping it out. I'm in a scrappy mood here today. So, I don't know about Fast. We already talked Fast. I want to talk some other stocks here because there's only 5 minutes left. And I think we should do our TradeZero segment here because it's going to lead me into some of these other stocks that I want to talk about, which are obviously some of the movers here today.
Let's do it. TradeZero time. All right, let's get it started. And of course, what's at the top? Of course, AMC's at the top there.
Oh, there's a story here
AMC.
too.
Easy story here to hit. Let's go to that one.
Yeah.
It looks like AMC was jumping and Ape stumbling as the court rules against the conversion settlement. And now it really creates kind of an indecision moment for investors here. What do you think, Dennis?
So I don't follow the story very closely, but apparently there was a settlement and now they're doubting the settlement, or the judges blocked the settlement. It's what they're saying on Twitter. I have not verified any of this information, but it makes sense with, what the stock is doing. So basically Ape wants to, what AMC wants to do is convert the Ape into the AMC. So now the settlement is not getting blocked, AMC is popping because obviously it's not good for AMC shareholders if Ape gets converted, because you're going to see those two prices converge very quickly. So Ape is trading down 11%, AMC is trading up 13% on this. Again, this is a tough arb to trade because the AMC borrow is simply too high. If there was no borrowing costs here, I think I would be long Ape and short AMC. But there is borrowing costs here, so I'm just not touching it. For the simple reason is that because I think eventually they do get this done, but I don't know for certain if it gets done. Nobody knows. But again, the borrow costs on AMC just keep me out of the trade. Last time we looked, it was 375% a year, which is basically 1% a day. So, yeah. I mean, if you're sitting out there trying to pick yourself up, and you can pick yourself up some money by being short it, but I mean, if you short this thing for 50 days, you got to make 50%. So that's a tough thing to do. So I just stay out of this. But as this headline, broke here last night, or at least was being passed around on Twitter, AMC started to rally and APE started to sell off.
All right, let's keep moving. Let's go.
I think the Ape could be a buy. It could be a buying opportunity. Again, though, if this conversion isn't allowed, if the Ape isn't allowed to be converted, then that's going to change things dramatically. I think eventually they're going to get a push through. I think that they might be able to eventually convert this, and Ape could be significantly higher. So I kind of like it as a pullback here to buy it, but I don't know if I have the guts to do it.
Yeah, it seems to me like a 50-50 trade, and I try to stay away from those, but we'll see what happens there.
Yeah, that's true too much.
Yeah, that's what it just seems like. You don't know if it's going to go or not go. It's binary, right?
Trade.
Yeah,
exactly. I mean, what about all this, all this talk about this and the conversion? And I mean, what about the company? What's going on?
Yeah, not looking good. Not looking good.
We can't say anything bad about it, though, Joel, because if you say anything bad,
I'm not saying anything bad. I'm just saying,
come and attack you. So I remember we made the rule a year and a half ago when I had people trying to, find me and kill me for saying something, that was taken out of context in a Reuters article. That you cannot say anything bad about AMC. So we've just, say, it's our thoughts. I did say all the way along when it's 50, I said eventually it's going to 5 is what I thought. That was my price target. And they eventually did make there. So again, I was early, but I think I was right on that one too.
I'm with you, Joel. The writing's on the wall. That's what I'll say. The
rating is not good, but we still love the Apes. The Apes, we love you, Apes.
You love them, Dennis.
We love you, Apes.
I'm not worried about it. You guys know where to find me at MoneyMitchBZ. Hit me up. I'll see you a little later. Leslie Pool Supplies here, getting an upgrade. Let's take a look here. Loop Capital upgrading Leslie to a buy, announcing a $16 price target. It's up towards 11 right now, just butting up against this 11. What do you see on this chart, Joel? Anything that you see here?
This 11's big. I don't know this firm and how much weight they carry, but this 11, this thing has been been underwater for quite a while here. But $11, I mean, you're up 56 cents. That's a big move. You just want to see this open up, get over 11. I'd even 11.16. And then you got a little bit more room on the upside, 11.50. Maybe not the greatest market day, but I don't know. People are looking for something to buy that's beat up. This is one of them to see can hold 11. And how's Pool doing? That's been got hit too. Remember when everyone was
trade is over. The lockdown trade where everybody was dumping all their money into their homes because we were never going to go out and do anything again is over. So that bubble, which is still there a little bit in Pool, it started bubbling from 200, pun kind of intended, 323. So you're still 123 points up from where it started running on the COVID thing. I've seen full, a lot of these stocks that had these big COVID pops come all the way back to where they were prior to COVID. So I'd be concerned that this could do the same. But, again, there's valuation to consider. I don't look at these companies close enough to analyze it that far, but just looking at this, just thinking, outside the box, is it hasn't had full circle here yet. So I'd be cautious on Pool and Leslie.
Okay, I'll let you guys finish up and be back with you later on.
All right, I do see one that's interesting here. Seeing up car up today.
One trade off exchange.
CARR. There you go. That's what it was. I was wondering if for a second there if it was Avis budget. I was going to be surprised there.
Let's go to the down. Let's go to the down.
Yeah, let's go see. Let's see on the downside action.
So I got about 3 minutes here with you.
All right, let's run through that.
Costco,
of course,
Costco,
like you can see that. Yeah,
we talked it already.
We talked about this one. CN.
We covered pretty good. Sienna, we got Costco.
Super Microcomputers, SMCI taking a hit.
I haven't looked at that one in a while. What's up? SMCI. That's for real. That is down $6 here. Sometimes it's an odd print, but no, that's for real.
No,
so what's the headline here?
Let me see if I got something on Benzinga Pro here.
Mitch, go and look here.
Looks like we got a Wedbush downgrade here. Wedbush downgrade of Super Microcomputers to underperform and announcing a $65 price target.
Woo, $65. That's a big rating. Who's the analyst on that one?
Wedbush.
No, do we know who though?
Let me see. Yeah, I have to look into it here. Let me see. I just got to go in the calendar.
If we go into the calendar. Here, I'm looking too. I'm trying to beat you to it. Underperforming. You go in the Benzinga. We're rating.
Matt Bryson.
Matt.
Bryson.
What a call. Matt's making a bold call. I like this call for the simple reason it's outside the box. It's a contrarian call. He's, trying to stand out here. And I mean, be bold, make bold calls. Instead of just being a lemming going with it, it's a contrarian call going with it. I always respect analysts that come and make contrarian calls. So not enough do it.
From our rating, he has a 72% success rate.
Oh, that's pretty good too. So when you're looking at ratings, when you see that sell word, they usually hit the stock hard and ask questions later. We saw that yesterday with ONON. I mean, you got the sell rating. Wasn't it downgrade to sell yesterday or downgrade to neutral? I think it was downgrade to sell. ONON yesterday.
ONON, I think it was a sell.
Yeah, so you get that sell rating. They really hit stocks a lot harder than you can think. So obviously yesterday was Bank of America, I believe, on putting their sell on and a price target of $19 or something on ONON. And it got hit, and it did take out the 30 support. Does it get back up there? I don't think the story's over here yet in ONON. But it's going to cool off. Maybe I think about like the 50% retracement from like 20 was really, the bottom, just going back 2.5 weeks ago to 33. Get that 26 area or even, not to fill the gap up, maybe just get down. I don't know if it's going to go that low, 25 to 50. I think I'd be a buyer on this somewhere on the pullback here. I don't think the story is over. I think it's just cooling off. Big difference. Sometimes the story you feel like is over and it's time to get out of the stocks. And other times it's just like, oh, it's going to go to a cooling period. So I think this is a cooling period for ONON. I still kind of like the company.
Big day for stocks like this. I feel like Snow, the growth stocks. We talked about it, how Kathy Wood rejected that 40 move. We'll look to see if the growth stocks can get a move again, right? Or will we start seeing those names sell off? We were starting to see them move. Like one of the ones that I was looking at, and I'm glad I sold it on the first move, was Unity on that 10% up day. It's right back to it. And so that's where we got to be careful today. That could flush right through. And so we'll see if this can come back. Some of these growth names like the ARKK names.
The biggest problem is with the growth names is you don't have like valuation support. And what does that mean? It means at a certain point, like when you're buying like a Johnson & Johnson, there's just value there where there's value investors that will come in and save the day. And it stops certain stocks from just going lower once the valuations get to a certain level. On all these growthy names that aren't making money, you don't have that. So when the momentum breaks, they can get really ugly really fast. And when the momentum traders are out, the value guys don't touch that stuff. So you don't have any support. So you just don't have buyers. And that's where you get these flushes like 6, 7, 10% in a day. And you're like, holy cow, why is nobody coming in? Well, the momentum guys are saying, oh, no, it's lost its momentum. I'm out. And the value guys are saying, I'm not touching that at all. So, I mean, that's why, from a long-term perspective, I try to pick on more value approach. I feel like, I don't feel like a Pfizer is going to lose, unless it has a lawsuit or something against it, and again, I've been wrong with the Pfizer too, way too early, way wrong on that one. But I feel like, when you're picking on these, Merck was one of my best long-term holdings. AbbVie was one of my best long-term holdings. Abbott Labs, one of my best long-term holdings. I was buying these at reasonable valuations years ago in troughs. And, it was 2011, 2012 in the European financial crisis, because Europe did have the financial crisis kind of after us when the European banks were all having trouble. That I was able to pick some of these up at really low valuations, picking up at 6, 7, 8 times earnings. Eli Lilly as well. My original purchase on Eli Lilly, I think, was $31. It's $362. Was it 31? Let's go. Can you go back to like 2009, 2010 on Lilly? I'm just curious, because we talk short term so much. I don't know how far you can go back. We're going to put TradeZero to the test here. How far can they go back? Oh, they go back a long ways.
2018 there, but I'm sure we can pull it back.
There's ways to go further back here too. Anyways, we're at the TradeZero segment, but just my point being is that if you're a long-term investor, buy good companies at reasonable valuations.
I agree with that.
When you don't have on a Unity, I don't have any valuation to lean on. The company doesn't make money. And if they tick positive for a quarter, that's not, sometimes, that's not like a history of, good companies at reasonable valuations. I mean, a Google and Microsoft and Apple, these companies are going to be there. Even if you're paying elevated valuations, 23, 24 times earnings, the odds are they're not getting cut in half from there. Is Apple going back down to 12 times earnings? Probably not. I mean, it could, but probably not. So that's why my approach with my long-term investing, which is probably, why my beta on my long-term investment portfolio is a lot less, is I take a more conservative approach to it. Because that's the money that I've made. It worked hard for trading. And then I turn around, and obviously invest that money. Well, I don't want my investments to have all this risk. I take enough risk in the markets on a daily basis that I don't need to go in and take huge risks in my long-term portfolio. I do at times. I do throw in some other things, but I give those a short leash. If I throw something in the longer-term portfolio, I like to set up shorter leash if it's, one of those higher beta names.
We'll see what happens to these healthcare names today, and will tech continue the turnaround? And like always, you guys can check out, of course, TradeZero if you guys are looking, especially for some short locates out there. Definitely, TradeZero has an extensive inventory of short locates. Just threw up the link so you guys can get, of course, TradeZero Zero Pro, their flagship software. All right, let's wrap up here. Dennis, any last comments for the weekend, actually? Because
I know. 4-day weekend. Obviously, we're going to get jobs number tomorrow. So we're going to come in, and the market's probably going to be up or down significantly when we come back on Monday. So keep that in mind. I'll probably be hedged going into the weekend. Again, cautious in the long-term portfolio. I don't like the Schwab trading action. I don't like that some of the majors. I wish it was just this like FRC. It was just FRC. I'd be like, we'd be fine. But when you start seeing some of the major companies and PACW not rallying here now, there's like a lot of regional banks. And the KRE, you don't even have to look at the individual. KRE is sitting on the low.
On the low,
42,
right on it.
40, right on the low. I mean, you've had this huge rally in the S&P, and the KRE hasn't had a sniff. And KRE, I mean, if we start breaking down from here, and it looks like that's what it wants to do, doesn't it kind of look like that's what it wants to do?
This is the what I call stair step move, and then we're looking for that elevator whoosh down, right? And so we could be setting up, right, sideways consolidation going lower. And one thing that you clearly see here is what? Lower highs, the trend of that showing up, especially since pretty much Monday the 27th. You see how the trend is kind of lower highs. So it's just leaking down. And the big part why we haven't had that whoosh is there's no news. But if there's any news to the negative side, I'm with you, Dennis. The charts show that it could just whoosh down, right? And so we got to be careful here. And of course, understand where the risk is. It's probably right down below it. So for you guys that have that type of risky appetite, then yeah, maybe you at least know where your levels are. But that's too much risk for me. And that's why I've stayed away from this trade. That's another reason why I don't think we're seeing too much jumping to the upside, Dennis, like let's say on even the bigger banks like JPM, because I don't feel like too many traders are really taking their shots and being like, oh, well, JPM is going back to 140 right here. If that was the truth, then I think you'd see some more volume coming into this trade. And what do you see on the volume? Declining volume. Yeah. So that shows me more and more uncertainty from a lot of traders out there. Not sure if there's more banking concerns, so they're not taking shots there. I
think the market's telling us that we're not out of the woods, and that's why cautious, not bearish, cautious. I'm going to keep saying that, because everybody's painted me as this huge bear, but really I'm just cautious right now. Because again, if I was bearish, I'd be short the market. And if I'm really get bearish like I did in 2010, it's very rare that I do buy puts. Somebody was just saying, oh, you said you buy puts. I rarely trade options. I used to be an options trader 2002, 2003. I trade options back in the day. I trade equities pretty much now. The only time I write some covered call, I'll do a little bit of stuff, but it's not my bread and butter. Very seldom trading options. But when I'm buying puts, it means I'm full on bearish this market. The last time I bought puts was January 2010. And we know how that ended. They all expired worthless because I was too early, and then I had to reload in February. And then the February ones paid, and they expired in June. But I remember I was too early even on the COVID trade. But it's usually, when I'm buying puts and stuff, that's when I'm bearish. Right now, I'm just cautious.
We'll see what happens. Like always, team, there's two sides of the coin. We'll find out. And I'm always trying to do a couple of new things that I think has really helped me is have a short-term, like medium term and long-term outlook. This helps me at least focus on, tailwinds and headwinds with that longer term. But in the short term, I can still play certain plays. Like you saw me short Microsoft, right? You saw me short AMD, but I was also playing some of these on the upside action. I think that the important part is being really nimble right now and being able to adjust to the daily action. I think that's what you're doing a lot, Dennis, right now, is just adjusting and being able to focus on what the price action is telling us versus what our bias is telling us, right? Of course, if you think about it, there's a lot of concern in the banking situation. And if technology truly turns around, will we see enough rotation into the other sectors to hold this market up? And that's why we're also talking about the high concentration in tech, because that seems what led this rally, right? It wasn't that it was a whole bunch of all the sectors going higher. It was a lot of these high mega cap techs. So we'll see how those turn around today. Will they keep coming down or will they find the bounce? Have a good one, Dennis. You guys keep up with Dennis Dick, Triple D Trader on Twitter. And like always, team, it's never going to be 100% where you guys agree with this. That's one thing that I definitely have gotten a lot better on. And I'm trying my best, like always, to keep things open, right? You guys are sometimes going to see something completely different than how I see it. And the big part, I think, of pre-market prep, and I say this all the time, is to point to flags. Flags meaning what? Just taking a look at something, right? Just telling you guys, hey, this is moving. This is how I see it. You guys always do your own investment research. Like always, this is just for educational purposes only, not financial advice. And I hope that you guys truly get something out of pre-market prep every single day, whether it be from Dennis, myself, or Joel Alconin. We want to continue pushing forward in your financial journey. Now come over to live trading. As always, I'm ready to get after this market. I know we got Zunaid. We got Lord Ryan. I've been killing it lately. Got a really nice swing trade on Microsoft yesterday. Let's see what we can get into today. Find out. Come right over to live trading. That's starting up right after this show. You don't got to go anywhere. And for you guys out there that maybe you just don't want to see a video, you just want to hear audio, I'll tell you one thing. You'll definitely have fun with Ryan, Zunaid, and I. And like always, if you guys want to join the book club, join it. This weekend, we're going to have a little bit of a break. Yes, we're going to have a little bit of a break because of Easter, but I want you guys to continue working on your Japanese candlestick charting techniques. If you guys want to learn some technicals and take yourself to the next level, definitely hit this link before you get out of here today. Now, let's go ahead and bring you guys over to that live trading. I'll throw up the book club link and get you guys right over. Don't jinx yourself. Never jinx myself, PJ. I'm ready to get after it. And like always, it's all about just using process approach. That's the way I like to go at it. So if you guys like process approach, you'll definitely like live trading. And that's starting up right now.